Have you ever been surprised by an additional tax assessment notice coming from KRA, especially when you thought that you are 100% compliant? This time round, it's not because you had planned to evade taxes, not at all, but because of a small but powerful tax concept referred to as withholding taxes. A tiny percentage that can make a huge difference between compliance and penalty. Withholding tax is a form of an advance tax that the payer of certain payments deducts and remits to KRA on behalf of the payee. Now, it is a concept that is used by KRA to reduce chances of tax evasion, because when tax is collected at source, then there are minimal chances that the payee will decline to pay them. There are normally three types of withholding taxes. Number one, professional fees. When you are paying any consultancy fees to an accountant, to an architect, to an engineer, to a lawyer. Interest income. Every other time you invest your money with a financial institution that is paying some interest to you for using your money, they always deduct 15% of the money before they pay to you. The interest income that your money has earned, you always receive it less 15%. Dividends income. If you have invested your money with a certain company like Safaricom, before they pay you your dividends, they always ensure that they deduct 5%. Now, if you are the one who is deducting, for the case that you have said you are paying a professional, always ensure that you file and remit the deducted amount of money to KRA within the next 5 working days. If you don't do that, you are caught in trouble with the KRA, and KRA will issue you with an additional tax assessment. You don't want that trouble with the KRA. There are 3 major problems or challenges that people face with reference to withholding taxes. Number 1 is when you fail to deduct withholding taxes when you should have. Every other time you are paying your accountant, an engineer, an architect, a lawyer, some consultancy fees without deducting 5% from them, there is a problem. You are caught in trouble with the KRA. Because number 2, every other time the bank is paying you your interest income or any other financial institution, imagine they are deducting 15% from you, because that is low. That is referred as withholding taxes on interest income. And number 3, when the company that you have invested money with by buying shares from, every other time they are paying you dividends, they are first of all deducting 5% of the money and they remit that to KRA. So once you know that, you will ensure that the money that you are receiving in terms of interest income and dividends, for interest income, 15% has been deducted, and for dividends, it is 5%. Understanding that will help you as a business owner, as a professional in finance, to always ensure to deduct withholding taxes where it is applicable. And number 2, to file and remit the same with KRA within the next 5 days, and to always keep clean records just in case KRA comes for you. You should be able to defend yourself, because when you do that, when you comply with the small taxes like withholding taxes, you will avoid the tax assessment from KRA, and by doing so, you make sure that you have the peace of mind and your business will not only survive, but it will thrive.